Ransomware is arguably today's most prolific cyber threat. This can cause a problem for small and medium-sized enterprises that don't have the internal resources or expertise to know where to start. Fortunately, the Institute for Security and Technology created the Ransomware Task Force to address the emerging national and economic security risk posed by ransomware. One of the many outcomes of this is the Blueprint for Ransomware Defense. It's a clear, actionable framework through which SMEs can defend against ransomware. The heart of the blueprint consists of a subset of safeguards found in version 8 of the CIS Critical Security Controls. The group of safeguards is referred to as Implementation Group 1 and represents a minimum standard of information security for all enterprises. This is referred to as essential cyber hygiene. The 14 foundational safeguards are the building blocks that are necessary to establish an enterprise's cybersecurity program. They also enable the implementation of actionable safeguards. The 26 actionable safeguards build on the foundational ones and are all about applying the technical controls needed to protect an enterprise's environment and defend against ransomware and other general, non-targeted cyber attacks. Focusing on 7 major areas, the blueprint helps defend against over 70% of the attack techniques associated with ransomware. The blueprint for ransomware defense would not be possible without the hard work of several contributing organizations. To download the blueprint and take the steps needed to defend against ransomware, visit the IST website.
All right. Well, good day, everyone. Good morning, good afternoon, depending on where you are. Thank you so much for joining us today. We really appreciate it for this, the final in a series of webinars talking about the Ransomware Task Force and, of course, the blueprint for ransomware defense. Today, in particular, we're going to be focused on cyber resilience and insurance innovation. If you've participated in any of the previous webinars that we've run, those have done deep dives into other areas as well. But today we really want to focus on the insurance side of this, the relevance of the blueprint to the insurance industry and so on. I'm very happy to be joined today by some amazing panelists, a very diverse group with a lot of background in this. Monica Shokrai, the head of business risk and insurance for Google Cloud at Google. Davis Hake, founder of Resilience. Prashant Pai, SVP and GM of Strategic Initiatives at SecurityScorecard. And of course, I'm John Banghart, Senior Director for Cybersecurity Services at Venable. So as I mentioned, we're going to be focused on cyber resilience and insurance innovation. So that will be our topic that we're going to focus on. Again, previous webinars looking at other areas, that information is out there. If after today you'd like to go back and have a look at some of that deeper dive information, that can be available for you. Again, as mentioned in the video, the blueprint was created by a number of organizations really targeting at small and medium-sized business implementation and really focused on trying to make it approachable, make it implementable by organizations that may not have a lot of resources. Having worked on the blueprint myself, it was really one of the more actionable tools that I think we've been able to create over the last several years amongst a lot of great work that's been going on out there. So very, very powerful document. And it was a great honor for me to work on it along with so many other great folks. Again, as mentioned, it's comprised of a lot of different controls from the CIS, Center for Internet Security, very, very much focused on the SMB, the small and medium-sized business. Key areas, as you can see here, about knowing your environment, how do we secure things or how do we configure things in a secure way, account and access management, vulnerability management, which is one of the key foundations, and then malware defense, security awareness and skill training, data recovery, and incident response. If you work in cybersecurity, or even if you just work in IT, you know that those are 7 areas that are foundational to any good program. And the blueprint really tries to focus on those in a way that can help you combat ransomware, but also have resilience in your program. So I've already introduced my panelists and myself, so we'll continue on. Again, in this session, you're going to learn about the current state of the cyber insurance market as it relates to ransomware, in particular, sort of what's covered and what isn't, what parts of the blueprint are relevant to the underwriting process. If you've got questions about what's the difference between cyber resilience versus defense, we're going to try and touch on some of that. And then, of course, importantly, what are some of the new innovations, the new approaches that the insurance market is using to help make customers safer sort of across the board? We've got some resources here that you can go and find, including the original ransomware task force report, which called out for the creation of the blueprint, and of course the blueprint itself, which again I highly recommend that you go and look at. So with that, I think we will go forth and get our panel started. So again, thanks everyone for joining us today. Davis, let me start with you. Talk to us a little bit about how does the market sort of underwrite this today?
Yeah, thanks, John. I want to thank you and Venable and IST for hosting, and Prashant and Monica for joining. I've had the pleasure of working with all three of you guys here, and you all sort of fit into different pieces of this puzzle. So it's awesome that we're all together on one webinar. I'm interested in hearing more what you guys have to say than me talking. But to kind of like set the stage, I guess, a little bit for where the insurance market has been. And where it's at today, and where we really see the opportunity for the blueprint to help drive innovation that we see is just around the corner in the market. You know, I'd say that traditionally, the insurance market has largely focused on the issues of data breach liability. This is where the product was born. This is where it's lived over, almost 2 decades. When the market came into the ransomware epidemic that started in 2019, it drove some dramatic changes. The changes that customers have seen externally have been pricing, more difficulty in gaining coverage, what the market calls a hard market for insurance policies. And a lot of this is based on the way policies have been underwritten because of data breach. Traditionally, carriers would look at paper applications. They would have a number of questions around security controls, what are investments going on, but really where they'd focus on 2 things. They'd focus on which industry were you in, and they would focus on number of records that you held, and then some controls around how you're protecting those records. But largely industry and record count, because data breach is the main concern, were the things driving this underwriting. When we saw the ransomware epidemic start to take hold in 2016, and then really explode in 2019 and over the course of the pandemic, this just dramatically changed claims in carriers. And what we were looking at, instead of fines and lawsuits that would take years maybe to work through the courts and pay out the claim, we were looking at ransomware costs where there was an immediate extortion hit from a Bitcoin payment that could be sometimes in the millions of dollars, and then also business interruption costs from that downtime. The ransomware task force has some stats from some of its members that show the average downtime for a company from a ransomware attack is 21 days. If you imagine 3 weeks being down at entities like manufacturers or healthcare providers are a big target for some of these criminals, those costs are astronomical. And so because carriers have been faced much more with these immediate costs, the market has had to rapidly retool to focus not just on data breach liability, which is still a concern, by the way, because these actors hold this data, but more on cyber resiliency of an organization. How prepared is this company where, if the actors are able to circumvent their best practices on vulnerability management, circumvent their best practices on identity access, circumvent their best practices on backup, and still get to them, which a lot of these actors are doing today. How do we ensure that company has done everything they can so that they're not down for 3 weeks or more, right? But they're restoring backup quickly. And that's this idea of underwriting against cyber resilience. And so a lot of this is looking at how do you look at technical controls? How do you look at what the company has done from business practices to align their investments to their core business? And when the ransomware task force came in and was looking to make a dent in the ransomware problem, one of the areas we looked at was how do we help the insurance market retool their focus from just data breach liability concerns to really tackle the additional concerns that come with an extortion event. And so as we started working, we looked at the blueprint as a tool that wouldn't only help the insureds, but would also help other insurance carriers. Because, insurance is a team sport, right? Like, we write excess on top of our competitors all the time. So how they underwrite accounts and how they work to provide and protect their insureds directly affects the rest of the market.
That's great, Davis. Prashant, or do you have any thoughts on this too, from Security Scorecard's perspective, in particular the way that Davis has sort of laid out the insurance market? What are you seeing from where you sit and where Security Scorecard plays into this?
Yeah, so great points, Davis. So if I take a step back, like what does insurance cover? So let me make an analogy on home insurance, which is what a lot of us can easily relate to. So on home insurance, I'm protecting my asset, which is my home. I'm protecting against a bunch of perils, which could be earthquakes, hurricanes, so on and so forth. But I'm also protecting my dependency on my home, where I live. Because if my home is not available, I have to go live somewhere else. And that's an inconvenience. So home insurance policy not only covers if something untoward happens to your home, and that is a covered event, then it covers you for restoring your home. But it also covers you for the challenges that you face. You may need to go live at a hotel somewhere. You may need additional accommodation. It covers you for that as well. As you very nicely explained, from data breach to ransomware, the big asset that the insurance industry contemplated to cover was really data, because data is an asset that companies hold on behalf of others. They could hold their employees' data, they could hold their customers' data. This is an asset that they're holding on behalf of others. So the first is you have to cover for damage to the asset itself. You have to restore that. You then have a liability because you're holding somebody else's data. And the third is, as that data is not available, you're covered for that. So that's what the cyber insurance industry was very focused on, and had a lot of its machinations in place in order to protect against that. As 2016, 2017 rolled around, ransomware started being thought about more as a catastrophic scenario, where you could have the NotPetya, WannaCries, and they kind of raised that as a possibility. However, the last couple of years, really, ransomware has been what's like a whole set of attritional events, all these many ransomware events. But most importantly, ransomware impacts devices, networks, and the availability. And you can just imagine the reliance that we have. So it not only covers the restoration of those devices, which, I mean, you can just go get new laptops, but it covers the fact that you now no longer have access to that. So it's a fundamental change in the terms of how the insurance industry understands what's being covered, and what reliance is not available anymore. So we've had the insurance industry really step up and start to think about how do we assess the risk on this new type of quote unquote peril and the damage that it can create. So that's sort of like one perspective. I would say 4 or 5 years ago, if you spoke to a lot of CISOs or risk managers at organizations, the commentary was more like, I have insurance companies, they really don't know what they're talking about. That has really changed. I mean, now the feedback that I hear, or I mostly hear, is that they're asking us too many questions. So that's sort of a bit of an evolution. And this is where the work that the group has done in terms of creating a blueprint is really amazing, because it outlines very clear, clear set of criteria on which you can understand what really drives the risk. And these are aspects that, in partnership, we have discovered are truly driving of the risk. So, so two things. One is, just to summarize all of that, one is we have evolved in what we are thinking of is being covered. So the assets, the perils, and the coverage, they're all really new. And here is where the blueprint is important, and our understanding of it will continue to grow, because at the end of the day, what we want to get to is sort of that building code of insurance, right? What are the minimum set of controls, capabilities, defenses that we need to have in place so that you can withstand an event of a certain intensity? I think that's where we are getting to. And I think, this pushes us much further, much stronger ahead.
Great, thank you. Appreciate that. And Monica, when we think about resilience, clearly we think about cloud providers, but maybe not so much when we talk about insurance. So help us understand sort of what's your perspective on this, Google's perspective, and bring that into the mix for us.
Yeah, absolutely. So at Google, I have two different roles that will be applicable here. So I'll talk a little bit about both. First, I help procure cyber insurance for Google Cloud, especially, but Google as a whole. And so I can talk a little bit to the risk manager's perspective of this process, of how insurers underwrite and how it's seen on our side. I'd say historically, and this is changing rapidly, and this conversation is very much applicable to that change, but historically, risk managers had more of the perception that you're working with a broker, typically, who's helping you through this process. There's strong collaboration between the insurance purchaser, myself in this example, and then the CISO. I think when you think about cyber as a line of business, there's probably more collaboration throughout a company than any other line of business. So both groups are working together on it. And historically, it's seen as a very tedious process. So you're getting like a 30-page PDF with high-level questions. A lot of times I hear from other CISOs that they don't know whether to answer yes or no to do you have MFA, because it's a multi-layered question, right? It's not just a yes or no question. And it's been a difficult process and somewhat there's been a lot of uncertainty in those filling out those applications. What we're seeing in the market, and Davis and Prashant have alluded to this, is a change in that over time to get us to a place where we're working towards more automated scanning where appropriate, and we can get into this over the course of the conversation, and data that is from outside in scanning or that's more verifiable. And so we're moving forward in that. But typically, historically, at least, it's been a very manual process.
John, if I could add to that, one of the things I wanted to share was at SecurityScorecard, we start from, our mission is to make the world a safer place. So the way we think about it is 3 pressure points. The first is we look at social pressure, which is where we share with every organization that there is information about them, cyber risk information about them, cyber ratings that we have on our platform. They're more than welcome to come look at their own information for free. We don't charge for that. That attracts a lot of organizations into our platform. But then any vendor risk manager, any other third party that wants to work with that organization, then will come in and take a look. So it's important to have that bidirectional information symmetry so that the reviewer and the reviewee have the symmetry of information there. So that's the first. We apply social pressure. The second is with organizations such as this, which are public-private partnerships, or even working with the government itself, the New York Department of Financial Services, National Association of Counties. We help apply regulatory pressure. And then the third is where the insurance industry is really a strong partner for us in helping drive economic incentives to, at the end of the day, help organizations, encourage organizations up their cybersecurity game. So, in doing all of this, the key is we refine the way all of these organizations who are stakeholders in a third-party organization's cybersecurity, how can they look at that in a consistent manner and then encourage overall, the more we all become cyber safe, the more the environment.
Yeah, no, that makes sense. And so I think, what I've heard so far from all the comments is there's sort of 2 themes here that I think are emerging. Number one is, of course, how do we improve the resilience of organizations sort of across the board? But also then how do we assess the state of that resilience as well? So Davis, let me come back to you. And you touched on this in some of your initial remarks, but maybe elaborate a little bit. From your perspective, how does the blueprint sort of help from that assessment perspective? I think how it helps with the building resilience is maybe a little bit more obvious, but help from the assessment perspective. How's that tool useful? Oh, I think you're on mute.
Oh, thanks very much. I think it's from the same perspective as how the blueprint was designed to help with individual insureds. So when we were looking at building this blueprint, one of the things that we saw out there on the market was, while there were a lot of top 10 lists for, do these things to stop ransomware attacks, what there was not was the set of building code standards for how you construct your own networks, how you implement security controls across your organization in a prioritized manner to defend against ransomware. And since one of the things that we saw in the task force was that 70% of attacks were going towards small or medium-sized enterprises, we saw that these were organizations that had limited budget and, more importantly, had limited time from their staff and team to be able to put up defenses. And it's probably also why they're the most targeted, right? So we were saying, how do we start to shift some of the economics of this problem? We thought what would be useful is not just to come up with another top 10 list for controls against ransomware, but to use an existing framework like CIS, which is the equivalent of digital building codes, right? And then go through there and say, where would we place our first dollar if we had a really tight budget on defending against ransomware? And this is where, groups like SecurityScorecard, like Act Zero, and like our claims and incident response teams weighed in to say, what is the most effective first dollar that goes into ransomware defense? And so as an underwriter, and I've had the pleasure of working with many underwriters as a service provider to them, and now having them on our staff, a lot of these folks are coming from non-technical backgrounds. They're learning how to do technical analysis, how to use data from folks like SecurityScorecard or external scanning, or how to match up internal control statements. And they, are basically inundated with all this data. And some of it's useful, some of it's not. But having that prioritized list of saying, okay, here is where a group of independent experts have said, this is the place where you should put your first dollars. And this is the place where, if you've done this already, you need to make sure that this is also implemented in this manner, right? Mm-hmm. That is so powerful to have that prioritization. And I think the blueprint is really the first effort to do this that I've seen, not just for ransomware, but really in cybersecurity. So I think in terms of assessment, right, we're trying to lay out the roadmap for how you should begin looking at insureds.
Makes sense. Monica, maybe I can turn to you and build on that a little bit from the cloud perspective, right? So we're obviously, and I think appropriately, looking at more and more small and medium-sized businesses moving to the cloud for a lot of great reasons. So where does this sort of measurement piece and using the blueprint from that perspective, where does that interface with what you do and where sort of Google views this?
Yeah, absolutely. So to answer that question, I'll give you a little bit of context of the other side of my role. So Google launched a program in March 2021, so it's been about a year and a half, where we use CIS benchmarks and we scan Google Cloud's or a customer's cloud environment for those benchmarks. And allow customers for free to use that scan to manage their risk. It's not exactly IG1, but there are a lot of overlaps with it. And customers will use this to manage their risk and understand their security posture. Then through a couple clicks, they can share that data directly with insurance providers and use that to help procure insurance. And through that process and working with customers over the past year and a half, I'll often hear from CISOs or their security teams of our customers that they don't know where to start, specifically SMBs in particular. They don't know where to start, what to remediate first. If they have a list of 50 things to do and they have 5 hours, where are they going to spend those 5 hours? So the blueprint allows us to really focus on, as Davis said, what matters most and how to appropriately allocate time, which has been really positive. We're working with it within Google as well to understand if we can better map our products to the implementation group and then help our customers through that process.
So Monica, maybe I'll stay with you for just 1 second if I could. And if this question is that sort of outside your area, please feel free to pass. But I know that having worked for a cloud provider myself in the past, I know that you're subject to a lot of regulation, a lot of scrutiny. So, is the difference with the blueprint really around that prioritization, or does it bring more to the table than, say, any of the other sort of standards and ways of measuring that are out there? Is that a distinction that you can make?
Whether it brings more to the table than other.
Yeah, sorry. So my question is, so when I worked for Microsoft Azure, we had 100 plus sort of certifications that we had to get, standards that we were subject to. I think some people I've heard talk about, oh, the blueprint is just yet another standard, right? It's just yet something else. That's not what I think. I worked on it. I think it's awesome. But, from a cloud provider who's already doing a lot of this work, it sounds like the blueprint isn't necessarily an added burden. It's actually something that you think is going to help you and your customers. Is that a fair statement?
Yeah, I think that's a fair statement. I'll speak more from my perspective rather than Google Cloud as a whole and where the company stands. But from my perspective, the implementation group, IG1, is a good way for SMBs to understand where to start. So yes, there's a bunch of frameworks across the board, as you've mentioned, that customers can use. But the goal of this, at least from my perspective, and Davis and Prashant can chime in here, but the goal of this was to really tell a smaller company what matters most, what's essential, and what are you going to focus on first. So I still see a lot of value in it. I'm part of the IST ransomware task force as well, and I've been working with this group for quite some time. So I do see the value in prioritizing that for SMBs, especially those that don't have a background in cybersecurity and might not have their own CISO.
Great, thank you.
Yeah, John, and I'll just say part of our thinking as we were starting this effort was saying, how do we not just redo another framework or like you said, add another thing that other people have to configure to or add an extra burden to. So that's why we went with a commonly known and implemented standard, not standard, but well-known framework like CIS's Implementation Group 1, right? This was focused down into things that everyone should be able to do and that are relatively low cost. And not only that, but a lot of the cloud providers are already starting to look at how do they communicate back to their users in sort of this language of different security controls. So we knew that by going with a partner like CIS, we would already have a step up on implementation, because then as the individual users could look at this framework and decide what controls they wanted to implement, where they want to invest their money, the vendors, the service providers, and security providers would already be in place to be able to help them implement those controls. They're not coming up with a whole new requirement or a whole new security practice that they have to do just to hit that first level of implementation. And same thing for underwriters. We've seen a lot of insurance companies look at entities like CIS and use tools like you helped build, John, like the NIST cybersecurity framework, as sort of frameworks to build our own underwriting processes around. So we see this, as a helpful tool to help translate actual defense against ransomware into something that is easily implementable and easy to budget against.
That's great. Prashant, anything you'd like to add to this?
Yeah, great points made. The one kind of perspective I would come from is sort of contrasting between hygiene and risk, right? So if you look at frameworks that were have been in place, they're focused quite a bit on hygiene, which is, hey, here's a checklist of all the things to be done. Risk looks at it differently, right? I am looking for an end outcome of a loss or a claim. And I think the amazing part that this group has brought to the table at SecurityScorecard, about 50%, if you look at it from a premium basis, the carriers, the brokers that use SecurityScorecard, we touch more than 50% of all cyber insurance premium that is underwritten and managed. So that's a huge broad swath of the market. We have innovators like Resilience who combine both the security and the insurance aspects. Folks like Google who have just such a wide lens on what they can see. Bringing this amazing capability together, we have really looked at what drives cyber risk, right? Not necessarily just hygiene, but what drives cyber risk. So and made it super concise so that we make it easy for small businesses to focus on what drives the risk and what controls they can put in place, what mechanisms they can put in place to protect against that, as opposed to purely a long hygiene checklist, which you could do everything on there. But still, end up with an incident.
I'll
Yeah,
just,
Prashant. Oh, sorry. Go ahead, Monica, please.
I'll just plus one that comment, that the differentiation between hygiene and risk. I think that's where the insurance industry can really help the security industry, is shifting their focus. You have a lot of experts in cybersecurity, and as I'm working more with this group of individuals, I'm seeing that they're transitioning into a risk view, and it's not a natural transition. A lot of engineers are thinking about problems at a very detailed level, and that's where they start, right? And so bringing the insurance industry in and bringing that that lens and how we see the world has really helped progress the industry forward.
Yeah, and Monica and Prashant just hit on a total like pillow spot for me. When I started working on a cyber insurance startup, I came from a security background, and I had a lot of friends who were either CISOs or technical security managers say, "What are you doing getting wrapped up in insurance?" Like, that they underwriters don't know what they're underwriting against. They're accepting all these risks. The policies don't pay out. Yada 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 yada. But the reason I tell them back is specifically what Monica said, and the point that Prashant was making, is that insurance has this tremendous opportunity to help take the actual risk that companies face, something that we've been struggling for years to try and get companies to shift away from only a technical cyber hygiene, threat intelligence-based approach, which is all an important piece, but to also encompass that and translate that into the company's business and financial risk. At the end of the day, why are you securing these systems, right? You're securing these systems to help drive your company's mission and serve value to your customers. And insurance is such a great bridge to have that conversation, because insurance looks at what's the financial potential for loss from these projects. And even if you look at the blueprint, right, in IG1, there's nothing about cyber insurance in the CIS control benchmarks and frameworks. And one of the conversations we were having as we were doing all this work was that it's critical to engage the insurance industry on things like the blueprint, where we can share what we're seeing, helps keep claim costs low, because there are certain controls that we've seen, even if an attacker gets in, this is going to help box in that business interruption cost for the business and for the carrier. And then alternatively, to help educate the insurance industry about the technical controls that might even stop the attack from happening on the first place, that we should be driving within our own clients.
Yeah, Davis, that's a great point. And, interestingly, I had a similar experience as a non-lawyer who went to work for a law firm. People would ask me, why are you going to work for a law firm? And similar sort of response, right? Lawyers help you manage risk. They help you avoid harm. That's where a lot of that activity happens. And I think what we've learned over the last several years is it really does sort of take that village approach. It's the lawyers and the technologists and the cyber people and the privacy people and the insurance, and sort of all of that is sort of necessary. And it's really interesting to see that evolve. And I certainly never questioned why you were getting wrapped up in insurance. It makes sense to me. And I think we see today exactly why this has become so important. So interestingly, I think this is a good segue to kind of change gears a little bit and start thinking about moving forward. And we've touched on some of these pieces a little bit, but let's bring some focus to it. So as we think about where the insurance market goes next, what does that look like? Let's define a little bit better. What is a more proactive insurance market? And we've touched a little bit on some of the things that matter there, like technical visibility. We've mentioned cyber hygiene a little bit. We've talked a little bit about quantification of risk. But let's try and paint a picture for our audience today about what should they expect in terms of where the insurance industry is going to go. And Davis, I'll stay with you on this, but then I very much would like to hear from Monica and Prashant as well.
Yeah, thanks, Sean. I want to hear from Monica and Prashant as well, because there's some of the vendors that are helping drive the industry towards a more data-driven approach. But frankly, I think the expectations that I talked about from my security friends that were saying, why are you going to insurance? The risk transfer piece of this can't just do it alone. And that's why one of the things at Resilience, we really wanted to start with this concept of how do we build a business model where for the first time, we're more of a security company that actually shares the risk and liability for our clients, and our goals are aligned, right? So that as we make them safer, we benefit, and then they benefit as well too. So we looked at this idea of going beyond just risk transfer to cyber resilience, which we think includes the technical visibility that groups like SecurityScorecard do, that provide scanning, that understand what you look like to an attacker. Also provide cyber hygiene, a lot of the policy work, John, that you've done with companies directly, helping build change within their leadership teams to prioritize investment in hygiene, but then also has that risk transfer that actually rewards when companies do those things well, right? And so I really think that what we're going to see in the market in the future of the cyber insurance market is that a lot more providers are going to put together, either they're going to build it like we have, or they're going to work with vendors like Monica and Prashant to build this idea of a cyber resilience offering. And that's where companies are not just putting up defenses against attacks, but also ensuring that, as we know, a determined adversary will always get in. And once they do, how do you make it incredibly expensive for them to operate on your networks? How do you make it so that your team is coming back and delivering value to customers immediately rather than 3 weeks later? I think we have, in the cybersecurity industry, ignored that right of boom for far too long. And it's my hope the insurance industry can really help change that.
That makes sense. Monica, thoughts on this?
Yeah, happy to chime in. So I think when I think about where we're going, first I'll start with what are we trying to fix? And one of the things that I mentioned earlier is the application process, right? And the questions that you ask, et cetera. I think one of the areas where a cloud provider can be uniquely helpful is through scanning quite a bit of a customer's environment from the inside out and sharing that data with the industry, and getting to a point where let's not say every, but many hours that a CISO is spending on filling out that application, they can also spend on reducing their risk. So as they're trying to fill out a new application, they'll go through a scan and they'll remediate risks as part of that scan and then send it through. And to Davis's point earlier, you're aligning incentives of their actual work and keeping their environment secure and the application process from an insurance perspective. So automation is one of the trends that I think we'll see. You're seeing SecurityScorecard do quite a bit of this from the outside in. You're seeing Resilience do it as well in their underwriting process. Inside out data is another trend that I think we'll see. And then through inside out data and having this process attesting the data directly rather than having someone write it in a form are a couple trends that, I think we'll continue to double down on in the future.
That's great. And Prashant, I heard SecurityScorecard mentioned a few times there. So what are you thinking?
So I'm gonna beat my home insurance analogy to death here. So let me. It was funny. I was at an event and I asked folks to raise hands as to how many people had a home insurance policy. And I think about 75-80% of people raised their hands. And then I asked how many people have gone and read their home insurance policy, and I think there were probably a couple, and they were not even sure why they did that. So insurance, right, has this stigma perspective that it's something you need to have, but it's something you would really not want to think about, right? That's sort of where insurance comes from. Cyber insurance is very different. First of all, even though it's technology, it is a man-made, it's a human-driven risk. So that's one. Second, it's constantly changing. So if you think about when you write maybe a property policy and you had 3 buildings, maybe by the end of the year you constructed a third, fourth one. That didn't change, but you could start with 200 IP addresses, end up at 300, right? You could plan to only cover data breaches, but suddenly you're exposed to ransomware and then supply chain attacks and whatever else. So the peril is evolving. And so what it presents to us is for the insurance industry to be on this forefront of transforming how insurance is thought about and the value it can provide to organizations. At SecurityScorecard, we are pioneering this view of continuous underwriting. Underwriting is nothing but risk assessment. It's an opportunity for insurance to be proactive and to be driving a better approach to how organizations can continually monitor their risk and then be able to take actions through incentives, encouragement, so that we continually keep a handle on the risk and maintain it. And that's a win-win. That's or a win-win-win. It's a win to the insured itself. It's a win for the insurance company, and a win for their supply chain, their partners, and everyone who's involved. So it's an opportunity for cyber insurance to really infuse this dynamic approach to risk assessment, risk control, where we can really stay ahead of the risk rather than be laggards and say we underwrote it. Let's just wait what happens till next year.
Yeah, and oh, sorry. Go ahead, please, Monica.
I'll do another +1 to Prashant. I think when we think about insurance, specifically in the context of Google, we're interested in using insurance as a way to incentivize customers to reduce their risk, and getting to a point where you have that feedback loop of here's the control and here's the loss that resulted from a given company with these controls in place. Getting that correlation and driving. I didn't mention that I'm an actuary by background, so thinking about the actuarial approach to it, I think is ultimately what will help our society reduce cyber risk over time, because there'll be a carrot at the end of the line of let's make sure I reduce this so that I can get that reduced premium or that the insurance policy in general. Sometimes you can't even get insurance in certain cases. So yeah, we're very interested in an ROI on security and driving that through insurance and using insurance to reduce risk.
Yeah, and at the end of the day, this is what in my title said founder of. I'm actually one of several co-founders, including Raj Shah, who was worked at the Pentagon on cybersecurity efforts, and our CEO, Vishal, who has been an active cyber operations officer. And the point that Monica made is the real pain that we have all felt. Like, how do you tie return on investment and incentivization to controls in a way that makes cybersecurity approachable for the most vulnerable, right? For those that don't have the budget. And this is what really excited us about the cyber insurance market. And after, being running for about a year, we've seen some amazing cases where, we've been able to come to companies that have had claims that are uninsurable, work with them over a few months on a prioritized roadmap that we've shown to our reinsurers, and actually get them a policy again. Or even bring in our consultants that have worked with them after a claim that we've had, and help their CISO argue for more budget to their board. We actually did some slides and flew out to Texas to help with a board meeting. It was awesome, and we were honored to be part of that. So I'd say it's a really exciting time to start to see some of these things that we've been pushing the insurance industry to do, that finally start to take hold and finally start to see some actionable results within the actual insureds, and helping them improve their cyber resilience.
Yeah. So, I mean, I'll kind of piggyback on the risk quantification piece, because I think the insurance industry is already driving and has that opportunity to push the conversation, where before a CISO would go to the board and to management and say, hey, I need to do these 100 things. And they would just have a list of many, many things they would need to do. And then the board would look at it and say, if we do all of these, does it mean we will not have an incident? And the answer is never going to be yes. You can never say that an incident is not going to happen. So we need to change the conversation to a dollar and cent, to a risk and return, where by putting on these controls, by investing in these tools, we reduce our risk by a certain amount. And I think that makes it very palpable, obvious, especially as you're talking to the risk management committee, where they can understand why then they need to do certain things. So I think that's a clear statement as to the opportunity for risk quantification. Where we are is the models are still undergoing a lot of evolution, right? So if you look at the numbers, and my favorite quote by George Box, who's a statistician, he said, all models are wrong, but some are useful, right? So, and a lot of times risk quantification models will come out and say, hey, your risk is $1.2356 million. And it's not as much about the accuracy of the numbers, but it's the story that number is telling you. If that number was higher than before, that means that you are not trending in a good direction. If that number was lower, then that's good. Let's break down. So it's more about digesting that information rather than getting fixated on the top. And I think that's another opportunity of where the insurance, both brokers and carriers can drive the conversation to say, here is the risk that you are. By putting these controls on, this is the reduction you get. And by having an insurance policy, this is the financial safety that you also bring to the table.
I just add that I'm seeing that a lot in the CISO community as well. So what's really interesting about what Davis and Prashant just outlined is that the CISO community is now taking that upon themselves to say, how can I model my own risk? There's a lot of collaboration between actuaries and that community through the FAIR model, for example. Doug Hubbard, who wrote How to Measure Everything in Cybersecurity, a lot of that is picking up and shows the value of the collaboration between insurance and cyber, which I think is a really interesting time.
And a plug for How to Measure Anything in Cybersecurity. Doug Hubbard's co-author was Richard Syrson, who's a good friend, and we're lucky enough to take him on as our chief risk officer. So I definitely second supporting awesome. Rich's book.
That's great.
It's a great one.
Yeah. So let me turn, we've got a couple audience questions that came in, which is great. Thank you for folks that submitted questions. If other of you out there have them, please put them in the Q&A. So I'll read them out just for the benefit of everybody online here. Could panelists comment on the recent settlement in the Mondelez Zurich case where Zurich had unsuccessfully argued that not Petya harms were acts of war? How are other insurers and the market at large looking at this issue, and what do you think coverage and exclusions for warlike acts will look like in the years to come? And that's open to anybody on the panel that would like to address it.
Yeah, I'm happy to start and then hand it over to Prashant, who I know has been in this industry a long time, as well as Monica, who's working a lot with other carriers. The first thing that I would note that is commonly not known about this case or understood when I talk to folks in security is that this case is actually based off of a claim for a property policy where it had, sort of silent cyber risk on the property policy. They had some lines about infrastructure and IT infrastructure systems. So this was not a standalone cyber insurance policy. I'd say if you look at the numbers on standalone cyber insurance policies, you don't see these types of court cases and claims and issues around warfare. So I think it's a bit of apples and oranges when you're looking at cyber insurance versus other lines. But the larger implications here of this case are certainly fascinating for everybody. I think for a long time, insurance never really covers acts of war, right? Like this was an issue during 9/11. It's why the U.S. Congress put forward the Terrorism Risk Insurance Act, was to try and give some clarity and stability to the insurance market that looks to insure buildings that were targeted by Al Qaeda. In cybersecurity, right? Like hybrid warfare is becoming much more the norm, especially as we've seen in the conflict in Ukraine with Russia. Cybersecurity is cyber attacks are part of their book, right? And there are criminal actors we see from ransomware gangs that are not state directed, that are not operating as active war, but oftentimes when U.S. law enforcement goes to try and shut them down, the countries they're operating in provide them protection. So there's a lot of gray space in what is an act of war, what is not, what is covered, what's cyber insurance's responsibility, what's a company's responsibility, what's the national level responsibility. And this is where it's been really interesting having a bunch of co-founders that all come from the government side of the space, because we see the government really trying to step up and take a larger role in defending the nation and even private companies beyond critical infrastructure. And this especially changed during the ransomware epidemic, right? Where the attacks have gotten so bad that they're really impacting a lot of what you consider Main Street style businesses, not just critical infrastructure. And so you've seen the U.S. government come out much more aggressively against criminal threats, specifically criminal threats like ransomware, rather than only focused on the nation-state warfare approach. So I think this case is a signal to the government, the insurance industry, and private companies, right? That we're all going to have to work together to solve this problem and understand, where the liability lies, where the financing can support this for companies, and how we all work together on sort of a whole nation approach to a collective defense.
Thanks. Prashant or Monica, anything you'd like to add?
Yeah, happy to. So as you know, I'll double click on what Davis said. Just, insurance always has had the acts of war exclusion, because that's in many situations the government acts as an insurer of last resort. Plus, this is a CAT scenario that the insurance industry has not contemplated covering. So there's clear precedent of that. The cyber insurance market has been really good about paying out claims, and more often than not, there have been very positive scenarios of those outcomes. However, the challenge that happens in cyber insurance, as opposed to something like terrorism, attribution is quite difficult. The lines are very blurred as to what is clearly nation state action versus what are semi nation state / cyber criminal nexus. So that's where the lines get blurred, and I think more work needs to be done in clarifying that. Having said that, even when you had 9/11 and was deemed a nation state or a terrorist action, there's still a lot of cases that have gone through the courts when claims have come in. So to kind of summarize, we are seeing a lot of conversation, which many of us are engaged in with the White House and with various international governments, where they're contemplated how to craft language and how to think about cyber war. So we should expect, much faster or soon for the government, for the U.S. government and other governments to formulate their views on what that will be. And then for the insurance industry to act in tandem. And the insurance industry is a big voice in how the government thinks about defining this. And then the insurance industry to act in tandem as to then jointly, how do we go about making organizations safe?
Great.
I would just add, when you think about insurance, we often have a reputational issue where everybody's worried about, is a claim going to be paid? Is it not going to be paid? And it's easy to get wrapped up in this mindset of like us versus the insurers, and the insurers aren't covering us, et cetera. If you take a step back and think about what this whole issue is trying to resolve, is essentially ensuring that this insurance industry can maintain itself in the event that there was a catastrophic event that really hit a bunch of policyholders at once, and insure would essentially go under if they paid all of those claims. And it's evolving in the talks of acts of war and a war exclusion, et cetera. But if we were able to better define that systemic risk that they're really worried about and carve that out, I think the conversation wouldn't be so charged. I'd also, Davis and Prashant have alluded to this, but the idea of a government backstop is generally where I'd go here. If you can if the government can do a backstop such that insurers feel comfortable writing this risk, such that insureds will buy the insurance and be covered, ultimately that will help drive better cyber resilience. And so I'm looking forward to seeing the developments in the government around this issue.
Great, thank you all. I know it's a complex topic for sure, and one we could probably do a full half-day seminar on, but I think that was very insightful, so thank you for that. One other quick audience question before we wrap things up. Someone was asking for the panel's thoughts on how the insurance industry has helped companies improve policies. I interpret that to mean cybersecurity policies, although they didn't say that specifically. So any thoughts on that, the impact insurance is having on getting companies to develop and implement better policies?
Yeah, I can speak to this a little bit. When we entered as a startup, we were a service provider, a data provider, and we had a great idea, but we did see a lot of pushback from traditional carriers pre-ransomware on saying that really improving companies' policies is not our responsibility. Insurance is a financial vehicle that achieves a steady rate of return, and as long as we can underwrite intelligently, that's the most important thing. I think what ransomware has shown the industry is that in a peril like cyber, you need to also be helping invest back in the company's own risk management process. So I think you've seen since 2019 a big shift in the mindset of the cyber insurance industry to say, how do we help with risk engineering, right? So that's the idea of going back into a company, if it's a property policy, ensuring that all of their sprinkler systems are implemented correctly, or companies like FM Global that have a long history of working on the engineering standards behind safety as well as the insurance. I think cyber is one of those categories of business where insurance providers are going to have to invest in this. The threat changes too rapidly for us just to underwrite profitably and intelligently, no matter how much data or perfect intelligence we have about a company. Cyber is a human-driven threat. You're always going to have an adversary who's better than a company's defenses. And so because of that, I think we need to drive our learning that we see from underwriting back into the clients and making them safer.
Yeah.
Monica or Prashant?
Yeah, I love how the person raising the question has worded it, and I love the use of policy, because one of the things, if you look at cyber, it's really a cultural issue. Culture involves people, process, and technology. So it's making sure that we make improvements in all of that. It's not just about purchasing tools and that's it, right? It's all about people and policy as well. So that's one. And I think then the key that builds on top of it is, as an organization, as any organization, big, small, or in the middle, you got to think about a cybersecurity culture. What is your cybersecurity culture? Is that something that you think about? Is that something that a number of folks and the right folks in our organization focus on? And understanding that has a strong bearing on how cyber safe and resilient you are. And I think that's the thing that insurance companies want to evaluate. And you will see, and we are already seeing, that brokers are putting together large practices of advisors who are going much beyond just explaining what a policy covers and doesn't cover and just premiums, to really starting to help organizations start about cybersecurity as a risk, as a strategic enterprise risk, and then help to improve their culture, people, process, and technology.
I would just chime in that I'm very supportive of this. I think that's what gets me excited about insurance, is trying to use insurance as a vehicle to change policies and improve culture. It reminds me of when we launched the risk protection program, which is a cyber insurance offering we have through Google Cloud. One of the foundational pillars of Google Cloud security strategy is shared fate. So rather than having a shared responsibility model, going to a shared fate model where we're in this with our customers and we're helping them with security from the beginning to end. When you think about insurance, I'd use the same term, right? There's a shared fate between the insurer and the insured, and getting to a place where they can work together to actually improve that risk helps both of them. So very supportive of that sort of mindset, and having insurers continue along that path.
Well, that's great. And I think that that's a great note to end on as well, Monica, the importance of that collaboration, right? And sort of that shared risk and shared fortune, if you will. So that's great. So let me, again, thank all of the panelists today, Prashant Pai, Davis Hake, Monica Shokrai. Thank you so much for being with us today. I think this is a fascinating topic. It's one that we will see a lot more of as this continues to evolve. And I think we got a good picture of that today. So thanks to all of you. Thanks to all of our audience, and happy to get everyone back to work on time. So have a great rest of your afternoon. Thank you.
John.
Thanks so much.
Thanks, Prashant. Thanks, Monica. Thanks, John.